Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium.
LME 3-month copper. An indecisive doji cross yesterday, but one that had a tail that was much more interesting behind it. You see, the previous session was an unusual key reversal up that was also an indecisive spinning top. Yesterday's action in part can be seen as a sort of a follow-on higher to this pattern, as the tongue on the day's range stretched up quite a way through the April 2012 high at 86.65 and peaking just over the declining medium moving average, currently 86.85, before coming all the way back down. The base of the session was, unsurprisingly, the important 50% Fibonacci line of the October 2020 to March 2023 move at 85.56. Below this, we have the declining short-medium moving average, currently 84.90, followed by a congestion zone between 84.24 to 84.40, which has the September 2012 high at 84.24 as part of it. And just below, the slowly rising long moving average, currently 84.23. That's going to enter that zone the next day or so. Overall, we are still within the broken and seemingly since repaired bull channel, currently at 83.13 to 93.97. Which is highlighted in dark blue on my daily chart. So far today, a strong drop from the opening, down through the 50% Fibonacci and the short-medium moving average, and only halting right now at the combination of the 84.24 to 84.40 congestion and the long-moving average. Personally, I think the long-moving average has done more of the heavy lifting in halting this move lower. LME 3-month aluminium. A seemingly decisive looking key reversal down yesterday with the lowest close since October 2022. In the bigger picture, we still have a number of things going on all at the same time. There is the big November 2022 to May 23 head and shoulders top, which initially looked like a possible continuation pattern, but seemingly turned into a topping pattern before threatening to become a continuation pattern again. This topping pattern has a primary target X down in the 2058 zone, with a much harder reach secondary target X1 down in the 1858 zone. Next, there are the two possible descending triangles and their relevant targets below. First and larger one is from the late February to May action. This utilizes the neckline of the same big head and shoulders top that is colored in purple as its base, and that's currently at 2272. And the late February to date downtrend also colored in purple higher up, and that's currently at 2437. To give a primary target X2 below in the 2178 zone and a secondary harder to reach target X3 down in the 2088 zone. Then there is the smaller optimized descending triangle highlighted in dark blue on my daily chart, made from the small late March to early May head and shoulders top neckline, currently at 2297, and the optimized late February to date downtrend, currently at 2380. Now this had a primary target down at 2233, a target that's already been achieved, and a secondary harder to reach target X4 down in the 2174 zone. Next there is the late February to late April bearish Andrews pitch, for the one that seems to be showing the bearish angle of attack of this market, with the market in between the middle time below, currently at 2125, and the upper time above, and that's currently at 2275. This pitchfork is highlighted in bright red on my daily chart. We also have the recent congestion over a wide band between about 2200 to about where the short medium moving average is currently at 2290. The question here, and it seems this question has been open for a long time. The question is, does this congestion wish to become a triple, quad, or even more bottom? Or, as I originally asked, does it wish to be seen as a reverse head and shoulders pattern? To all these, I'd also add the following once more, and that is this whole action becoming a possible rectangle pattern? Well, is it? I'm sorry to list so many possibilities, both bearish and bullish, but it's the sort of market right now, just is that sort of market. As an addendum, we've had a dead cross earlier this week of the declining medium moving average, currently at 2341, down through the almost flatlining long moving average, currently at 2355. This is a lagging indicator. Now, so far today, a slightly higher open and then a straight move down, effectively a continuation from yesterday's key reversal down. inside the previous pattern. The market has punched down through the next support, the August 2018 high at 21.78, and carried on further down. We next have support at 21.56, but the better support lies down with the declining medium moving average, and declining middle time, currently at 21.25. This action today already means that the primary target X2 at 21.78 and the secondary target X4 at 21.74 have been both achieved.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.